Talk of recession abounds, but China is doing its part to help the global economy. GDP came in ahead of forecasts, expanding 4.5% last quarter on the year. JP Morgan and Citigroup both boosting growth estimates on the world's second biggest economy on the back of that print. The big story there is the consumer, and the push to get people to spend looks like it's finally paying off. Retail sales jumping 10.6% on an annual basis. That's the biggest monthly jump in almost 2 years. From the corporate perspective, Tiffany owner LVMH saw a spike in quarterly sales last week thanks to largely to the pickup in demand. And the rebound also catching the attention of luxury sector leaders like L'Oreal. It bought cosmetics brand Aesop this month. Hugo Boss was an early international luxury brand to enter the nation. It also refocusing on growth in China. So what does this mean for your investments? Luxury is notoriously seen as recession-proof. One way investors like to dip their toes in is through the consumer discretionary sector. And Verify points out that has had a fairly solid 2023 so far, despite the volatility in asset classes. You can see an uptick in the Invesco's S&P Consumer Discretionary ETF. On more of pure play basis, Verify cites flows in thematic ETFs like the Global X Millennial Consumer Index, or MILN for millennial. Meanwhile, the China Golden Dragon Index continues to balance the reopening narrative with geopolitical concerns. And China's luxury consumer may be seeing a comeback, but is the U.S. consumer also seeing buying increase in the luxury sector? Here with more is Yahoo Finance's Brooke DiPalma. Brooke.
Well, good morning, Inez. The post-pandemic splurge and what we saw here in the U.S. as consumers look to spend post-pandemic seems to be dwindling down a bit. Based upon LVMH's latest quarterly results, we saw revenue growth there up just 8%. Now, that was far lower than what we saw in Japan, what we saw in Asia, as well as Europe. But LVMH said that while Asia is quote-unquote improving fast, they said that revenue growth here in the U.S. was good, but they did say softer. And as you could see there, 8%, the lowest revenue growth out of all its markets. And taking a step back and looking at overall retail, according to foot traffic analytics company Placer.ai, during the third week of March, overall retail foot traffic was down 7.1%. But during the first week of April, we did see a bit of an improvement there. Overall foot traffic down just 2.1%. But of course, we'll see in May, late April, when Target and Walmart and other consumer-facing companies report, if consumers are still making that switch over to food items, over discretionary spending. In March, we saw CPI, when it comes to groceries, down 0.2%. And so finally seeing a bit of relief in food, hoping that it then reflects in these companies' quarterly results.
And how is the consumer, speaking of food, how is the consumer in the dining space? Because so much attention is paid here in the U.S. to services and the dining sector and dining out. How are they faring that?
Yeah, well, it seems like inflation is finally hitting the consumer's ability to dine out. Based upon, once again, Placer.ai's foot traffic analytics, we saw overall foot traffic during the first week of March, the week of March 13th, we saw foot traffic down 4.4%. But yet, Americans are spending more when it comes to restaurants. In March versus March 2022, spending was up 13%, totaling $96.5 billion. Now, the reason behind that, the rate of inflation to dine out was up 0.6%. And so while Americans are dining out less, they're actually spending more. And so ultimately, when it comes to Americans' ability to dine out, it seems to be lessening a bit. But of course, this comes as that rate of inflation of food away from home is increasing. And maybe Americans are beginning to just cook more at home.
Yeah, and it's a trend that we see. They are spending more and getting less for that.